Welcome back. This is Phil at the Laptop Trader channel on YouTube. Welcome back to our community. Again, here to share my experience, give back to stock, investing and trading community one video at a time. There's my email contact, laptoptraderphil@gmail.com. Caution, most stock traders lose money. Please protect yourself at all times. And you can read the rest of that disclaimer. We got our February Laptop Trader agenda, our monthly agenda. Again, for the new folks, we'll quickly review our basics and patterns. I've got a few new slides for that. We'll go over market update, both monthly, weekly, and daily for the three main ETFs that I watch. I've got a new slide that is really good. Why is risk to reward so important, and why you need to track it in your trading? What is moving going into February? I have several trade ideas for you. And I've got a lot of slides this month, 63 slides. So mostly pictures. This should be enlightening, entertaining, educational, and let's get to it. So again, just for review, this is the first thing I look for when I look at charts, usually a monthly chart. I look for what stage are we in the price cycle. So I always think of music when I think of this price cycle, right? First you had live music, and then that's still around, but not as big as it used to be. And you had like the phonograph, that's no longer around. And you had records, and you had tapes and CDs. And now today we've got iPods and portable music and streaming music on our phones. So these products and ideas come and go. So as a trader, we're trying to catch the growth in stage two. Another reminder slide of just some different names for the stages that you may even hear in the media or from me as to what they may be called. And there's only three ways price can move within these stages. You're either in an uptrend, a downtrend, or a sideways trend. It's only three options when it comes to price. And this is just a quick wrap it up in a picture of kind of where to buy and sell and what professionals look at when they're buying and selling, different strategies on this graph of maybe where you would buy, where you would hold, where you would sell, and then the cycle starts over or companies go out of business. So I think that's kind of helpful. Again, this is just a reminder of how to read a candlestick. I'll just leave this here for 5 or 10 seconds. You can take a screenshot if you want, but that's how you read a candlestick as a reminder. Candlesticks communicate emotions and what's actually going on in the market at the moment, at the time frame you're looking at. This is just what I use as a buy setup, what I look for. I call it a 3-bar turn, or I abbreviate it as a 3BT on my charts. That's where I would look to buy or put my stop loss. This is just what a pivot is on a chart, pivot high or a low. I usually look for pivots on daily time frames, but they happen in all time frames. This is a new drawing I created about trends. So we don't want to buy in a stage 4 downtrend. You probably lose money if that's if that's where the trend is moving, because price is still moving down. We can buy in stage 1, but price can stay here for a long time, years even. And I have a couple examples this month to show you that. Price can also move lower out of stage 1 and make new lows or even go to 0. It's better to wait for an early sign like a higher pivot, low, and try for a low risk entry or a 3-bar turn buy setup. A safer area is confirmed. The safer area is after a confirmed stage 2 uptrend and a large move to a consolidation of price. So here you've got stage 4, stage 1, We kind of get this move up. We get a first higher low. So that would be an early entry. If you get a buy set up there, more risky because price could always start to move down again. But then we get a nice move up into a consolidation. We've got a ceiling here. We got a new floor here. Then we got this ceiling. Okay. So now we're in stage 2. You could buy this breakout from the consolidation, or you could buy this area where what was the ceiling is now the floor, and look for a buy set up here, or a 3-bar turn in this area. This is a very safe area to buy because we're in this uptrend now. Okay. So then watch for tighter prices and buy the breakout over that area for a good risk to reward. So in this area, we would be looking for a tight stop, a good risk to reward. If it did go against us, we wouldn't lose very much money. If you miss this breakout here, watch for another 3-bar turn on a pullback, which is right here. Safer area compared to the first 3-bar turn over here in stage 1. So we're just looking for more confirmation on these in the areas that we're looking to enter to buy stocks. This is another new, I guess, diagram I made. These are 6 very common price patterns that repeat and happen on any time frame. 1 through 5, you would buy the breakout over the high. 6 is an illustration of where to buy a buy setup with a 3-bar turn. The buy setup can happen after any breakout pattern on a pullback. We should be looking for these patterns in a stage 2 uptrend. Why? Because buyers are in control in stage 2. We have a directional bias higher. One common thing to scan for on a platform is look for new stocks with new 52-week highs. So that's a nice area to start. And then I just numbered them, named them. So number 1 would be you have a sideways range, and then it breaks out, called a range breakout. Number 2, we have an ascending breakout or an ascending triangle. So the top would be kind of flat, and then we have an ascending higher lows, and then it breaks out. 3 would be a descending breakout, and this is, you'd see price come up significantly and then start to retrace, and then break out again, making another move higher. 4 would be what a price over time contraction. So you'd have a big move up, and you'd have some sort of resistance, and it would start to tighten up. The price would keep hitting that ceiling, meanwhile making higher lows, and then break out. Also called a VCP pattern, or a volatility contraction. Price contracts over time, and then you buy the breakout. That's a very powerful one because you get a nice risk to reward on that. Number 5, a bull flag. So you'd have an increase in price, and then you'd have fairly tight price action, forming this wedge or a flag, and then you'd buy over that high as price tightens up, giving you, again, a nice risk to reward. And finally, you could buy a buy setup or a 3-bar turn after any of these. Maybe you see a consolidation, then a breakout, pull back, and you look for that 3-bar turn here or here. So all these work, and you'll see them on the charts, but that's kind of what we're looking for due to risk to reward. Next, let's cover the markets quickly. So this is a monthly chart of the S&P ETF SPY. Each bar is a month. We had a pattern here of kind of a downtrend back to an uptrend. Made this little, there's a 3-bar turn here on a monthly chart. So you could buy over the highs here. Maybe the high of this was 452 or so. Now we're at 495. We just made a new high on a monthly basis over this pivot, so that looks higher. I have a directional bias higher on the S&P 500. Same with the weekly. A very strong uptrend currently over the last 12 weeks or so, maybe 14 weeks. So that is making a new high weekly. And then daily, we just put in a new high on Friday. I think this market is probably going to continue to just grind higher this year as earnings come out and companies report earnings. There'll probably be a pullback some point during the year we'll get a 5 or 10% pullback, but overall I think the S&P will continue higher this year, unless major economic news, major interest rate increases and major inflation increases, major political news or war news or international news. I will say one thing this year: this is a presidential year, and I would pay absolutely no attention to who wins or loses, because historically, it just doesn't matter which party or which candidate wins or loses. The market's going up or down if that's the way the market's going. So that's one comment on that. I wouldn't get tied up in the political stuff as far as if this one wins, the market's going to be great. If this one wins, the market's going to tank. Just not true. Nasdaq, similar picture to the S&P 500, even a little bit stronger. Closed the month at 429 at new highs. So again, very, very strong Nasdaq market, symbol QQQ. Weekly, same picture, new highs. And daily, made a new high on Friday. So this is again continuing to show strength along with the S&P 500. So I would be looking for stocks in either of those two indexes. Then we've got the Russell 2000, more of a broad-based representation of the overall economy and the markets, because it's got 2,000 different stocks. A little more in a sideways range for the last 15, 18 months. Right now it's towards the top of that range. Can it break out over that green line at about 195, 196? I don't know. We'll see. We definitely have volume increasing on this move up. So that, I would say that is a good sign. We are also, this green line I drew is just resistance. This blue line is a moving average, and this other green line is a moving average. And price is currently above both of those moving averages. And we're forming a bit of a wedge there. So just a little bit of a wedge. If that breaks out over this 195, 196 area, I would expect these small mid-cap stocks to make a run for 250. Will that happen? I don't know. We'll have to see. Weekly, the chart, same picture, consolidating towards the top of the range. Again, one positive is increased volume on this move up. We have this little pullback, maybe a higher low compared to any of these other lows. If that holds and it breaks out, that would be, if this low holds and we get a breakout, that would be definitely be looking for smaller mid-cap companies to buy. If that doesn't happen, it starts retracing towards the bottom of the range, then I would avoid this area of the market for another month. Daily, it's just kind of going really nowhere. It is consolidating towards the top of the range. Again, daily price is kind of hovering around this 20 period moving average, the blue line, and just above the 50 period moving average. Now this ETF seems to respect this 50-day moving average for whatever reason. It respected it here. Price broke through the 20 period or the 20-day moving average, and it kind of bounced off to 50. So maybe we're starting to get a little turn up here, but again, that's just speculation. Now let's get into this month's topic. Very important. I think you guys should take a screenshot of this to get it embedded in your mind. For my normal email members, I'm going to include another video from another educator, and he also highlights this type of graph. This is a little bit different, maybe even better, but I think this illustrates a great point. Why does risk to reward even matter? So on this top line here, we can see we've got losses. Okay, so the blue squares are losses, the green squares are wins. And if we just go left to right, we can see we have 7 losses. We limited our losses to $1 each. Or you could even use percentage. If you want to use a percentage, it's the same math. But minus one, okay? So we had 7 losses. We lost $7, and we had 3 decent wins, 3 nice wins. We won 10, and we won 10. So that's a very good average winning versus average loss numbers. So for every dollar we risked, we won $10 on our wins. And we didn't win all the time, obviously. So we have to be willing to lose. It's just part of trading. It's not easy to get over, but it's something you have to get over. Anyway, we won 3 of 7 trades, or we had a 30% win rate. We were profitable and made $23, or if you want to use a percent, we made 23% of our account equity. So we lost 7, we made 23, so that is very good. Second example, we had the same win-loss ratio, right? We won 30% of our trades. On our wins, we took half of the profit. So again, a $1 loss to a $5 win ratio is still great, right? It's still 5 to 1. But if we just do some quick math, we have the same win rate, but your winners are half. So in this example, we only made $8, or 1/3 of the profit above. So up here we made $23 with the same win rate. Here we made $8. Both are still very good, but I think that I just want to show you the difference, how larger winners matter. Keep your losses small, okay? Third example. Now we have a 50% win rate. So we lost 5 trades, we kept our losses small, and we won 5 trades. Each time we won, we won $5. So we had a 5 to 1 ratio. So improve your win rate to 50%, keep your losses small, keep more money. Now this time we kept $20. So we didn't really get the home runs. We had some real nice trades. We only won half of them. And when we won, we had a good win-loss, good ratio there. So in this example, we kept 20. The first one, we kept 23%, even though we had only a 30% win rate. The second example, we still did pretty good, but you can see just a slight change. And what this line represents is your experience. The more experienced you get, the higher the your win rate is, and the more experience you gain, you'll keep more of your money, keep more of your gains. On this fourth example, we went back to a 30% win-loss rate, but this time we added in a big winner, a really big winner. So we had a $5 win, we had a $10 win, and we had a $25 win, a really high win there. So now we had one home run win. We still only won 3 of 10 trades. We kept our losses small, but look at the big difference. Now we have a net gain of $33. So one winning trade can make a big difference in your account. The opposite of that is one big losing trade, so it can make a huge difference in your account. So if we had a $10 loss or a $25 loss, we wouldn't have any gains in this scenario. So big wins and big losses matter. Finally, one final example. Now we took more risk. We didn't really keep our risk tight. We double our risk to $2. We still have the same 30% win rate. On our wins, we won $5. So we won 15, but we lost 2 times 7. We lost 14. Now we took more risk and with the same win rate and had small gains of $5. Now after all the work, we only made $1 net profit. So risk size matters and large wins matter, along with win rate to be profitable. That's the point of this graph. I hope it helps you out because I think this is the #1 reason why traders don't make money. They don't track their trades. They don't know what their average win is. They don't know what their average loss is. They don't have any big wins because they're always scared to hold on. And sometimes they take big losses and blow up accounts. So this is a very important graph to internalize. So let's look at some more charts. Here is a monthly chart of symbol UWMC. Again, monthly chart. So what stage are we in? Well, the stage 4 to stage 1. Now it looks like we're in stage 2 uptrend. We're above, prices above these two moving averages. We did have a little buy set up here. We just made a new high on this month in probably December. Yeah, December, January. We had a bottoming tail, and now we have a green bar on at the top of that range also. So this looks like this could be a possible nice risk to reward trade, a fairly new uptrend, and not an expensive stock. So let's take a look at the weekly chart. Again, this is showing a little bit different pattern that I didn't draw for you guys, but this is more of a traditional cup and handle pattern. So this big move down and back up will be the cup, and this little kind of half circle would be the handle. We can see a pullback, a bottom and tail, green bar, and then kind of an igniting bar here. So that's, I think that would create a nice risk reward trade if prices get over that Friday's high. Okay. So that is that one. This is the daily chart of that, showing again kind of the cup and now this handle part to the right. The red line would be a possible stop loss. The green line here would be a possible entry, giving you fairly tight risk of maybe 30 cents. And a nearby reward back to this high, which would give you about 40 cents of reward. So right off the bat, right on this small chart, we can see at least a 1-to-1 reward. And if we go back to the weekly chart, if we start making new highs, $8 isn't too far away. So we can see, I think, a decent risk reward on that one, if it plays out. So that's why we use stop losses in case it does not play out the way we expected. Next one is just, so this one I took off the moving averages so I could show you a possible risk reward scenario there. This is just what it looks like with the moving averages, right? The 20-day, the 50-day, and the red 100-day. So these are starting to all kind of move up in unison. And right now, price is above all three. We closed with the what I would call kind of this 1-2 combination where you get the igniting bar and then a little bar towards the top. Buy over those highs. Could be a nice risk reward possible trade. Ally. This is a monthly chart. I just drew some general lines on there as far as potential targets and possible support. So this pink line here would be support, major support down here, right? Next pink line up would be in line with this to the left, more of a minor support. And we can see this bar here is bouncing off that minor support at 31.75, give or take. We then get this tight bar to start February. This green line and red line would represent an entry and a stop. And then this green line would represent a first target and maybe a second target. So I think you can see with that tight risk and these two potential larger targets on a monthly basis, that could be a very nice trade. Again, that's just showing the stages. We're currently in an very early stage 2 on that. So that'd be a possibility. Let's look at the weekly chart. Weekly chart, we're actually showing a breakout over this area. That looks really good. One other thing I want to highlight about this is this move up into resistance. We get 1, 2, 3 fairly tight weeks. We get a bottoming tail here. We get this red bar, which makes a new low under these. Then we get a green bar that actually was red at one point because the bottom of the tail and came all the way back up and engulfed all of this. That's a very bullish pattern. Memorize that pattern. You see that? That's a very, very bullish pattern. And here's the same lines drawn on the weekly chart showing risk to reward, possible entry into targets. Okay. Daily, again, same lines drawn, possible entry, stop, and minor support down by 31.73. So that is shaping up to be a possible trade. Hershey Foods had a major sell-off. Now we've had 3 months of fairly steady buying. No large candles yet, but we can see on this chart, this monthly chart, where we had a stage 2 uptrend, climax top, and then 6 months of straight steady selling. So the stage 4 downtrend into this kind of rounded bottom now, or stage 1, starting to turn up on the monthly chart. Now price is still below all these moving averages, so this would be a very early possibility. But Hershey's such a big company that I think this is something where if somebody's looking for some long-term value, I think it's a possibility. Weekly, we can see the pullback, major sell-off. Now we have this a little bit of buying here for 3 weeks, a little bit of selling for 4 or 5 weeks, all-time low, and then we've had 5 or 6 weeks of buying and a gap up, close higher in volume at the end of this week over this short-term 10-week moving average. So starting to turn up for Hershey. Again, this will be very early in the cycle, but I think if with the fairly small candles, I think it could offer a decent risk to reward, maybe longer term for the next year or two. So that's that. Daily Hershey is looking even better when we kind of zoom in. So this red line will be the long-term moving average. Downtrend, all-time low here. Igniting bar, kind of the sideways pattern where price tightened up, and we gapped up. And then we have this interesting pattern right here. I meant to circle this for you guys, but I didn't do that. But this green, red, green is what I call a 3-bar sandwich. And then following that is this tight bar right at the top of that. So if this price moves up on Monday or Tuesday over those 200 area, that would give you a nice risk reward with that tight candle. So that looks pretty good. Nice possibility there for Hershey Foods. Major company. Blue Owl is a little bit extended on the monthly time frame. Again, big move up and down, down and then up. Extended from these moving averages, but sometimes what is extended can become more extended. So looks like it's starting to maybe flatten out with the small candle. You can see the range. This is a fairly large range, smaller range, and now a smaller range. So momentum is starting to slow to the upside. So whether this pulls back or goes sideways for a few months, we'll have to wait and see. I'm already in this company, the lower price, but this is one to definitely watch. Has performed well so far this year. Weekly, it doesn't look as extended. Steady buying. Again, kind of respecting this 10-period moving average. Moving up. I believe I bought around here in this area, around the 1350 area maybe. So that was kind of the step up, another step, and now we're just put in a new high this week. Symbol OWL, Blue Owl Capital. And daily looks like it's also kind of respecting this 20-period moving average, the blue line. If we get a little turn up here, I would consider that a possible buy point, even though monthly it's extended. So don't forget to use a stop loss if you get in on this one, in case it turns down. This is just showing what happened at the end of the week. It did put in a 3-bar turn on Friday, so you could buy over the high of that bar, and that would give you a risk to reward would be somewhere around 75 or 80 cents on that one per share. This is just some notes I made about why this looks so good to me on the chart. Just put some notes in here, drew some arrows for you guys. Just price pulled back for 20 days, and then it put in this igniting candle, gap up. Then we had a volatility contraction. If you follow this blue line, price got really tight, gapped down, and then gapped up again. So was a signal or a clue as to price continuing higher. And then we got this 3-bar turn right here. So that one looks pretty good. PayPal, this would be a warning as to why it's so tough if you buy stocks in stage 1. This has been in stage 1 since probably middle of 2022, all through 23 and into 2024. Price is tightening up. We've had some buying interest. I know they've had pretty decent earnings reports, but there's just no interest yet. Or not a lot of interest yet in PayPal. So that's one to watch. So stocks can stay in these stage 1 areas for a very long time, or even drop lower. So that's a cautionary tale on something like that. The problem with that is if you get in, let's say you get in back here somewhere, and you're like, I know it's in stage 1, I know it's going to move up, and then it doesn't. Well, now you're tying up capital for long periods of time, not making any money. That's why I put that in this month's presentation. Weekly, same thing, still in stage 1. After this earnings event, we had a somewhat of a positive reaction to earnings, whereas before we had 2 negative reactions to earnings. So earnings is coming up on PayPal. Maybe wait till after earnings comes out to see if price moves one way or the other. This is one sector that is starting to move again, and that's the marijuana sector. This is symbol MJ, stands for Alternative Harvest ETF. This has been beaten down for 4 years or more, and it just it's really still in a downtrend to some degree. It's kind of starting to make the stage 1 turn. We do have some increased volume or increased interest at this time, and you'll see it more on the daily chart. So weekly, it kind of made this, had some interest here and then sold off. It just kind of slowly started creeping up. See the spikes in volume, so interest is increasing in this sector. And on the daily chart, we have some interesting clues as to possibly a new uptrend. We've got the all-time low, higher low, another higher low here, another higher low here. This was interesting, this bottoming tail bar on that pullback, so that created a higher low pivot. Then it really moved up pretty good. So moved up somewhere around between 320 to 340 up to 388 in a matter of a couple of weeks. Now price is trending above all these moving averages. And we had another bottoming tail, another clue, 2-bar pullback, and then an igniting bar or a wide range expansion bar. So that's another clue that buyers are starting to become more in control of this ETF in this sector. So this looks very positive for that sector right now. Carvana is another possible idea. Weekly, it's had a bit of a price contraction pattern where price has moved up and came back. We had a little bit higher low there on earnings, had a good reaction to earnings, and now it's kind of making another higher possible turn here. So watch Carvana. That's a possibility. Daily, it's still kind of in this pullback mode, so not quite yet. Seems to respect this 100-day moving average. There was support back here in this consolidation. support, support, and possibly more support. So we'll see if Carvana moves up out of that $40.30 area in the next weeks. TJX has been a very strong stock since the middle of last year. It's one that I missed. It just made a new high. Seems to be in a very, very strong uptrend. Another interesting thing about these uptrends, as you can see right here, price moved up, the overall volume moved down. So there's no real incentive or will right now to sell TJX, leading to higher prices. Daily, we have, again, higher pivot lows, red bars ignored, a little bit of a 3-bar turn here, tight consolidation. And we got this interesting bar here. We have a range expansion red bar. Came down here, touched this moving average area, which matches up here. And then we've got a green 180 reversal to a new high. So that's very strong. Like buyers are saying, we're still in control. Sellers try to take it lower and failed. So TJX still in a very strong uptrend. Micron has been an underperformer versus stocks like NVIDIA and AMD, but starting to make this move up, starting to respect and follow this 20-day moving average up. So Micron can be a possible catch-up trade to the other stocks in that industry of semiconductors. Shopify trending above the moving averages now. We've got these, the 3 moving averages are all pointing up. We had this pullback, a little bit of volatility, and then volatility kind of went away. We got a red bar ignored, tight price. We have this another pullback to the 50-period moving average, and then a gap up close on Friday with a bottom and tail green bar. So that looks good above probably 82.95. Shopify, nice uptrend there. Alphabet looked good until earnings came out. So this is a cautionary tale of why you have to choose whether you want to hold your stocks into earnings or not. And what would you do, if you woke up on Wednesday morning and you saw that? So any stock can gap down on earnings or gap up. And it doesn't matter how big they are. So this one gapped down from, 151 or so, closed the next day at like 140. And then Friday, I put in this bottoming tail green bar in volume, but that's a pretty strong move down, indicating the desire to sell or short Google stock for the time being. So that'll just be a watch. Veritiv Holdings, symbol VRT, and a very strong upward monthly trend, extended for sure. I've been in VRT since this area here, so $60 is my target. I've met that. I'm thinking about selling most of my shares, maybe keeping a few for the future, but that's been a nice move in VRT. Weekly, it doesn't look as extended, but it is. Just made a new high. So the interesting thing about new highs is stocks making new highs tend to want to make new highs, just as stocks making new lows want to continue lower. Sometimes things get extended and even overextended, and it's tough to know when to take profits, is all I'm trying to say there. But that's a wide range igniting bar out of this area, so that looks higher. Prices definitely look higher on symbol VRT. How high it will go, we just don't know until it stops going higher. But that was a nice trade. I think I may have mentioned that in the previous month's video or the month before. I don't know if you guys took that trade or not. Again, on the daily chart, it doesn't look extended. We've got the 3 moving averages, the train track formation there, and just made a new high on Friday. So very strong buying pressure on VRT. Again, this is one that I held into earnings, and everything looked great monthly, weekly, and daily. And then earnings came out and crashed. I stopped out in this area here, below this area. So again, I chose to hold through earnings. I took a chance because everything lined up on all three time frames, and I took a stop loss. I didn't lose much, but still doesn't feel good to take a stop loss. But it's something you have to be willing to do. Again, that's where I stopped out, just around the $29 mark, and I had a target. Interestingly enough, I entered back here, stop here, so I had a good risk to reward. I got to the target, and I decided because it was so strong, I would just hold through earnings and see if I could um, maybe set a new target. Well, that was my choice. So I accept the consequences of that choice. I got stopped out. You know, move on to the next trade. Zoom, another stock that's been just languishing in this long-term stage one sideways trend. It's been there since again the middle summer of 2022. Not much interest in Zoom. Um, so it's underperformed. The S&P 500 has moved up considerably, Nasdaq has moved up considerably, and Zoom has just languished. And that's the problem with buying stocks in stage one. Again, on the daily chart, there's no evidence whatsoever that Zoom is going to come out of stage one. We just had a pretty decent sell-off. And in this area, it broke the support area below 67, and that looks lower. So Zoom actually looks lower. Wells Fargo is a possible idea. I just drew a few support lines here. Support. You got resistance. You can see the price had trouble getting through this area. Big red bar there. Again, that's around the 46 and a quarter mark. And then price kind of came up. This had a breakout, wide range candle, pulled back. Now it's giving us this nice buy setup in that area after earnings. So Wells Fargo looks, I would say, directionally biased. My bias for that would be higher at this point. Daily, again, it had a move up and then a sideways move into earnings. Actually had a negative reaction to earnings, but then turned right around. Now we've got very strong buying pressure. When you see that, we just get, candle after candle moving up like that day after day. That's very strong buying pressure. Good demand for uh, Wells Fargo Company, symbol WFC. Shutterstock I put here because I think I may have suggested this a while back. Just want to caution you guys on this one. It's not behaving very well. And we've got this range expansion bar here, this red bar on volume. I don't like that. I don't like it. I don't like that it couldn't really break out here. It couldn't break out here. And now it's come up again, and it's just having a hard time getting over that 49, 95, $50 area. Now it has turned up the last 3 days. It could continue higher, but if you're in this, I would raise my stop, here or here, just in case it decides to sell off again. And Shutterstock, um, this is what happened the next day. See, it made a new high, but with a really weak new high. I don't like that either. And then this one would be after that happened. So here was that new high, and then after that it sold off again. So there's major resistance here over 50 and $51. Just is not having any luck getting over that area at this time. There's not a lot of volume other than this one volume spike here, so I'm not sure how to read that other than caution. Just say use caution if you're in SSTK, or even just sell it, find something else. just not behaving very well right now as far as a directional bias on Shutterstock. So that is all for, should say February. That's all for February, and thanks for watching. Please like, subscribe, and share with others, and drive safe. Don't forget to share size your trades, do your homework on your investments and your trades. Again, good luck from the Laptop Trader. We'll see you next month. Goodbye.